You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. It is time for episode 2 of the bi-weekly options extravaganza. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you have been binging throughout the week. You had your double dose of Education Wednesday yesterday, your OPRs, your OBCs. You had, of course, your double dose on Monday of this show, as well as the crypto rundown. You had a bunch of fun stuff hitting you throughout the week here. So remember, if you like what you hear, this show, any of the shows we do, keep rating and reviewing. It does help those folks out there. These are crazy markets. These are troubled times. So help those folks have a lighthouse in these crazy, stormy waters. Keep rating and reviewing wherever you find this content. Of course, keep sending those questions and comments in, too. We do love to hear from you guys. Take us off in all sorts of interesting directions, and it really does make things fun. And let's see who we're hearing from today. Let's see if they can make it fun as well. Let's start out there in the quiet, the tranquil day like today. We can use a little quiet and tranquil. Let's go on out to the quiet hinterlands of St. Charles, where we are joined by Uncle Mike TOSAW from St. Charles Wealth Management, a.k.a. the Mike TOSAW on Twitter, who's blown up the charts, already up to 60 followers. You're on fire, sir. Uncle Mike, welcome back to the program, sir.
Always happy to be here. I'm happy even when it is down, when S&Ps are down 2%. I'm just a happy guy.
That's true. You are. So it's not an Uncle Mike type of day, but he's still got a smile on his face. Now we head on out to the dark and stormy shores of Maine. This guy's never got a smile on his face. He's always mad. He's trying to hit some vol bids before the show is missing them, so he's already angry. He's already got umbrage before the show even starts. He is, of course, the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital, by way of his fortress-like compound on the shores of Maine. Mr. Rock Lobster, welcome back to the program. To you as well.
It is good to be here. Yes, of course, when I have umbrage because I think this is starting to get a little stretched. I'll dump some of my long ball. And as soon as I say that, all the bids go hide under a rock. So anyway, I threw some offers out there anyway. We'll see what happens if my mood can change during this very show right here.
Yes, that's true. You are prone to mood swings on the show. As we head right into our first segment, it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading, what is lighting things up out there. It's been another crazy, turbulent week out there. Earlier in the week, we, of course, had Powell and the Fed kind of talking things up a bit, saying, yeah, we're going to step in and support these things if things get crazy out there. That seemed to give everyone the boost they wanted. The shot in the arm. Markets were looking mostly green following that. Then coming into today, we seemed like we had a little bit of a sell-off on the tape. Again, this is why we never plan for our shows much longer than, let's say, a half an hour before a show usually, because the worm can turn on a dime, and it certainly turned this morning. Most of the major indices now firmly in the red. S&P closing in on 2.5% to the dark side right now, off about 2.33%. The Dow is about 1.75%. NASDAQ off 3%, about a little over 3%, 3.15%. So it's getting blood red out there pretty quickly out there. And again, volatility reflecting that VIX, not that long before showtime, was shy of the 23 handle, right around 22 and change. Now, was coming to showtime was at 25.85. That puts it up about 3.5 points from our last show. VVIX, the vol of vol, has also been rocking and rolling out there. It was at a 117. Let's see where it is now. It's popping all over the place. 121 now, so it's up another 4 points even from where it was on our last show. And then, of course, we have our old friend VXX, which has been an amazing product to watch this week. In fact, I was looking at some downside earlier this week, saying this actually looks kind of nice. Might put on some downside. As things happen, we get busy. We're producing a lot of content here on the network. The bell rings, you miss it. And so I'll just put it on tomorrow. And then, of course, coming tomorrow, it's down a point. Now today, it's back up again. It's at about a 15.5 coming into showtime. That puts it up actually not that much from our last show, only about a quarter of a point from Monday out there. But that reflects just also how much this thing has been moving. It was down in the 14 and change not too long ago, and it's actually threatening right now 15.91. So everyone's laments how much VXX costs from a vol perspective, but days like these and this week in general, it's been meriting that. It's been moving quite a bit. It's up 10% already today, 1.5 points out there. So madness afoot. And vol Q, aka the at the money vol of the NASDAQ 100. Remember, no skew on this one, just at the money, straight at the money, was 32.25 kicking off the show. That puts it up a whopping 7 points from Monday. Of course, if you see what's been going on out there in NASDAQ land, probably not a surprise out there. NASDAQ's been leading the charge to the downside most of the days this week when we have been selling off. So just crazy stuff. Now, if that wasn't enough crazy to mix into there, game is back. GameStop is back. The squeeze part due is apparently in the mix. This thing pretty much tripled, more than tripled, just in the last 12 to 24 hours out there. Most in the last part of yesterday's session is when it really started turning up. And then it turned it up more in the after hours into the morning session. It was about 40 odd bucks. Just, it was 52.5 yesterday. And then by last night, it got up to 170. So more than tripling. And then it sold off again in the early morning today on the open, right around to about 119.5. And now it's back up to almost 170 again. No one seems to be able to pinpoint what is driving this paper. What was the catalyst that drove this? So we go back to our old standby, which is pretty much what's going on out there in the broad market today. More buyers than sellers in game, more sellers than buyers out there in the broad indices. You'll hear some talk about the 10-year spooking people, some earnings perhaps there as well, perhaps some talk of new variants. At the end of the day, more sellers than buyers is what we're going with here on the show. Let's go around the horn. Let's go, because it's a kind of dark and stormy day in the markets, let's go out to the land of the Rock Lobster. Let's see if we can distract him from all the VIX call bids that he missed out there. Mr. Rock Lobster, sir, what is lighting up your tape in this tumultuous Thursday, sir?
The bid for vol is dying as we speak. It's uncanny. Although my timing is very good. I need to be a little less. I need to be a little less angry for a nickel, because I learned something a long time ago. When you own something and they want it, you better give it to them when they want it, because they might not want it in 5 minutes, right? So we'll see what happens, but it looks like there's a little bit of turnaround involved. I thought what's spooking the market? Well, how about these? Have you seen a chart of the Treasury bonds lately? I have to say it's not looking very good. It looks like a one-way road to Palookaville for bonds. Yields are kind of blowing up. Volatility in TLT is through the roof expensive for that product. For those that follow it, very, very expensive. So I think, all this talk, Powell, like this and that, and, all this government spending, we're going to do this. I think the market right now is saying, you know what? Yeah, I think at this point, if you guys want to keep spending money, it's going to cost you. So I think we'll see if there's anybody listening over there at the White House or in Congress or wherever. But right now, the bond market is saying, we ain't buying no more of your junk for no yield. I think that's what the message is. How much that unsettles things, I don't know. Because it does look like, the employment numbers, all that stuff is getting better. You saw the COVID-sensitive stocks, stuff like Carnival Cruise Lines, airlines are all kind of taken off this week. And somebody checked the wet blanket all over everything. So, at least to this point, I would say it appears that things are getting better. I think higher rates are actually better. That means the economy there's demand for money and all kinds of things in general are getting better. So right now, I think there's always that, rates are going up, we're all going to die. I don't think so. I think the economy can handle higher rates, and it can also handle maybe people going back to work, and they can do less of that stimulus stuff. Just, hey, everybody go back to work. We don't need to do it. And I think there's I think right now there's a serious difference of opinion in Congress on that. So, and we'll see. But right now the bond market is saying no mas for you, is from as far as I can tell.
Yeah, it is kind of funny when the head of the Fed comes out and speaks in these, calming, reassuring tones, and the market's like, yeah, no. We're not taking any of that. We're going to do it ourselves. We're going to jack things up ourselves. We're going to do what maybe you should be doing. So yeah, it's always interesting to see how, and it did seem surprising to me when the early blush of what Powell was saying, everyone was so positive and the market was such a rapturous response. I was kind of scratching my head saying, really, do we have that many more bullets left in the chamber for these types of things? And apparently now the market's deciding, yeah, maybe we don't. Takes a little bit of a delayed reaction out there. And this is quite the severe delayed reaction, but that's where we find ourselves. Mr. Uncle Mike, sir. This is pretty much the opposite of an Uncle Mike type of day out there. So what is lighting up your tape today, sir?
Oh, shoot. I turned my screen upside down. I was looking at a chart. I thought we were having a really good day, but I got to turn my screen back to right side up. Sorry about that. No, today is, the first lesson I want to go through on today is that yesterday going into the close, I was short a put spread and I closed it. And I actually was in for my aggressive strategy overnight in cash. And so it wasn't because I was a genius thinking this was going to happen or anything like that. But the reason is that I was kind of on the borderline. I usually like to get out when I can capture 80% of the profit on something. And it just got filled right at the close. And just because it finally gotten to that, it was like a penny away. And I decided, okay, once I saw it exactly at my point, I'm like, okay, I'm out. So I was happy with it. And so I was kind of nervous going into cash overnight because of the fact that, of course, if the market goes way up, I'm going to miss it. But, of course, the market did gap down a little bit today. And we were actually positive for a little bit on the day today. But as the markets came down, I started getting into some positions again. I'm still have a lot more money I could put on the table, but I think I might wait till the end of the day. And that if we come up and I miss out on this low, I'm fine with that, but we're going to have to come back quite a bit for me to want to put more money on the table today, which even if we gain 2% in this market, I'd still probably be good with where I'm at, quite frankly. So I guess the message that I have from that standpoint is that when in doubt, get out. That put spread was not going to give me much more benefit, even if the market were to go higher. And so if you're on the borderline of whether you should stay in or get out of something, get out. That's just always where it's at. Let's say that you sell an option for $1 and your price target, you want to buy to close at 20 cents. If it's at 21 cents going into the close, I would get out at 21 cents because for a penny, you get to not have the overnight risk. And it's kind of a nice thing, quite frankly. So that's kind of where I'm at with the lesson on this. Now, in terms of what's happening with the markets today, I think that right when the Treasury was approaching the 10-year was approaching the 1.5% mark a little bit ago, that's something that kind of gave the market a little bit of a shot more to the downturn. But from what I'm seeing, though, is that it looks like we're covering, and I can look in a second to see where the actual yield is of the 10-year Treasury at this point. But I think that's one of the main things that's driving this. And that, as you put it, Mark, if I'm not going to buy, the markets are saying, I'm not going to buy your junk unless you give me a little bit more yield. And I think that's kind of what's happening with it. And let's be honest with ourselves, the interest rates were very low for a long, long time. And we do have efficient markets, and the fact that IEF, what I trade, which I'll talk about in a second, we were at the 120, 122 levels for quite a while last year. It came down. And so one of the things, like I said, what I've been doing is I'm just selling covered calls on the way down for our bond holdings. And I understand that that's selling covered calls on a decreasing underlying is just a Band-Aid for the situation. I understand that, but I'm not looking to protect risk. IEF's a long-term holding for myself or for my clients. And so I think that one of the benefits is holy cow, I can get a lot of juice for this thing. That's for sure. Volatility is definitely going higher on this. And so, but in reality, this is a ginormous major move in the bond world. And it's down it means the underlying is down a little over 1% on the day. And that's a major, ginormous move in the world of government treasuries. So I feel pretty good about that trade right now from the standpoint that if it does continue to go down, I'm really, since last May when I started doing covered calls on these pretty consistently, we really haven't lost that much because we've taken on a lot of income from selling the covered calls. So I know I've been talking about that a little bit on the show, so I wanted to mention that with what we're doing today. And like you said as well, GameStop, what surprised me a little bit is that after the close yesterday, when you'd put out your tweet about Mark about GameStop going way up like it did when it was north of right around knocking on the door at 200, it really did surprise me that we didn't really have that much of a reaction on the S&P futures. My initial thought would be if we're going to start playing that game again, I would have expected a sell-off. But like anything, that's why I don't play GameStop. So that's one thing that did surprise me with it. But today, I think that the market maybe also, in addition to the Fed speech, may have also had a slightly delayed reaction to GameStop a little bit today, along with the catalyst of the 10-year hitting the 1.5 mark. So with that, that's my take on things today. And I'm just looking at my S&P chart as I was talking. Market went up 20 points. So just let me talk the rest of the hour and we'll get this market taken care of.
There you go. You're talking it back up. You're also single-handedly crushing the bid for vol that the Rock Lobster was looking for. So there you go. Working at cross purposes here on the show today. Let's see what's lighting it up out there from an overall market perspective. Kind of surprising how little action is going on out there in VIX land, given how much of a move we're seeing out there. VIX, as of a few minutes ago, only 289,000 contracts on the tape. That's pretty light, especially given the fact that the ADV has now ticked up north of 700K. That's getting pretty far up there. Not too long ago, VIX was circling and threatening to break 300K in the other direction. So VIX is getting active, but for whatever reason today, not so much. SPY at about 3.4 million contracts, the ADV 4.16. That's kind of what I expected, similar percentages with VIX as well, getting close to their ADV already, but not so much. The S, 726,000, the ADV 1.2 million. So S starting to finally tick back up there. It was shy of 1 million for a while there in the terms of ADV. The Qs, 1.21 million already, so well north of their ADV, which is just a tick north of 1 million. And small caps doing pretty decent paper, 402,000 contracts, ADV 711. If you're interested in all things small cap, vol, and everything else, stay tuned. TWIFO coming up in a little bit here on the network. Got the once and future Dr. Vic, some other folks joining me on the show there as well to break down some crazy developments out there in the land of small caps and everything else going on in the world of futures options. So stay tuned for that coming up at 1:30 p.m. Central, so pretty much half an hour after this show. In terms of what's lighting it up from an overall single name perspective out there today, a pretty active day. Cost you about 284,000 contracts to break into the top 10. That's nothing to sneeze at. There are many days when it's 130, 140,000. So that's a pretty high bar to get into the top 10. That gets you to AMD, which, you know, all these other names are fighting their way in. We have all these newcomers to the top 10 all the time. But AMD says, get out of here, kid. This is my spot in the top 10 here still. Good for 284,000 contracts. Number 9, Sundial. Yeah, they're back on the radar again. This $1.44 name doing 301,000 contracts. Cover your ears out there, the Viceroy, wherever you are. I know that would be deeply offensive to you. It hit a high just, it looks like a couple of weeks ago on the 10th of nearly $3, $2.95. So this one's pretty much been cut in half since then. But also, if you look back to late last year, in November last year, it was trading 19 cents. So this thing's had quite the run over the course of the past 6 months. Then we got number 8, Twitter. Twitter good for 312,000 contracts. Let's see what's lighting it up out here from a Twitter perspective. Twitter on the move, maybe bucking the trend a bit. Twitter up nearly $5, $4.79, or 6.66%. To 76.70 or so. So that's an interesting run for Twitter. Number 7, Neo. Day that ends in Y. Got to have some electric cars in the top 10. That gets you Neo 336. Number 6, Nokia. Another kind of cheapy name that we don't really talk about a lot anymore. I believe it's around $4. Yeah, 404. Doing 440,000 contracts today. Let's see. Is this getting caught up in the squeezy McSqueezersteins, as I like to call it? Looks like it had a decent pop last couple of sessions. Yeah, yesterday and into this morning, it went from 398 up to 4.25. So not GameStop percentages, but it's something. Maybe a little bit of earnings going on out there as well. Looks like this is more of just the GameStop and meme related lift to this name here, but it's good for 440,000 contracts and number 6 in our top 10. Number 5, yeah, it's game. It's back. It's good for 745. So we're at number 5, listeners. We're already up to 745,000 contracts. That shows you, A, what kind of day it is, and B, that's only number 5. That's usually good enough for at least number 2. Number 4, Tesla, 825,000. Last I checked, they were threatening to break the 700 level back to the dark side. Let's see if they did it. Of course, Tesla had a crazy week where they swung well below the 700 level, then rallied way back above it, and bulls and bears had their claws and fangs out this week for Tesla. Good for 825,000 contracts right now. Only number 4, though. Number 3, it's been a name that's kind of been locked at the top of our top 10 for a little while now. This is Palantir. This one's off about 8.25%, trading 24.25 or so right now. Good for 848,000 contracts. So Palantir has been this name ever since their earnings a couple of weeks ago. They've been on another level from a volume perspective. Something really lit a fire out there in Palantir options of late. Number 2, Tesla's number 4, so it ain't Tesla. It is AMC, listeners. Yeah, the memes are back with a vengeance. AMC, at least one of the few names where they had the good sense, and I think they had a little bit of luck, too, the way their earnings calendar worked out, to issue some shares at these inflated prices. Well, it's inflated again. $9.98 right now, up about 88 cents or 9%. So the meme poppers are popping again. Good for 1.13 million contracts. I know back in the early blush, AMC was one of the better ones from an overall vertical perspective. I haven't looked at it today to see how it's setting up out there today, but it's certainly moving. Number 1, you know what it is. Nothing can dethrone the king. It's Apple, 1.15 million. If you come for the king, you better come heavy, or not at all, because Apple says, get out of here. I'm holding this top spot yet again. Let's see what else is lighting it up. We do have some hot names coming off the earnings move and earnings move results reports, hot off the presses from our friends over there at ORATS. If you want more detail on these, we're going to have Matt on the advisor's option tomorrow special Friday edition of the Advisor's Option after Vol Views. Spoiler alert, it's episode 100, going to be our 100th episode spectacular out there. So that should be a fun one. Stay tuned for that. And Matt always does a great job breaking down these reports and where they get all this data from and all this good stuff. So I will do my yeoman's best in his stead. But we got some hot ones just off the presses this morning, right before the show here. We had Papa John's Pizza. They're popping off this morning. They were at 102.64 going into their announcement. They were pricing in 5.6%. Get this, they delivered 14.5% in the dark direction. As of this report, they were trading 87.88. I got to imagine they're probably lower now. Let's see. 86.09. So they have given up nearly $2 more since then, off 16%. So things apparently not good in the realm of pizza. You know, for a while there, Domino's, all these other pizza delivery names, they were blowing the doors off. They were the clear winners of the pandemic. Apparently not so much right now. It's a big pizza day, apparently. Domino's Pizza was before the bell. I love how these names aggregate around certain days. Domino's Pizza, ticker symbol DPZ, 364.5. That shows how lofty they had become as a result of this. They were pricing in nearly 6%, 5.8%. They delivered 8.3% in the other direction as well. So at least in the localized pizza market, we have an overperformance of volatility, and they're at about exact same level right now, 334.74 right now. So they're pretty much still off about 8% out there right now. We also had Best Buy. I know they didn't deliver the numbers that the street was hoping for. They were actually saying they think maybe if this worm turns in the pandemic space in terms of getting better, that actually is bad for them because people are buying less tech and spending more money on outdoor things and everything else like that. So let's see. They were at 113.5 going into their announcement. They were pricing in 6%, and so far, at least, it was about 6.8% that they had delivered right before this, as of this report. Let's see how they are looking right now. 102, and so they're selling off more. They're off 9.7% on the day. So it's so far we're 3 for 3 in terms of outperformance, all to the dark side out here as well. We also had NVDA last night after the bell. NVIDIA's been kind of the bellwether for the crypto names for a while there. It was viewed by many people as like this leading indicator of crypto in terms of demand for their cards. They kind of got away from that for a while there when, you know, the crypto winter was in its teeth. And now it seems like they were starting to get that again. And then it seems like last night they kind of threw some cold water on that again. And that maybe was what was spooking some people. Let's see. They were pricing in 5.8%. They went into their announcement 579.96. So we got some pretty lofty stock prices out there. Might be time for, look how well the splits did for Tesla and Apple. I'm surprised more names haven't jumped into that fire. But let's see, they were underperforming so far. They were at 3.9% coming into this report. Let's just see how we're looking now out there in NVIDIA. 538.17. So that puts them actually down a lot more, down 7.25%. So now they are outperforming to the dark side, which again, it's a rough day to be announcing anything out there because you're just getting sucked into the maelstrom that is the macro environment out there right now. We also had very timely Moderna before the bell. 144.75 is where they were going into their announcement. They were pricing in 8%, so a fair amount of juice for, not surprisingly, for Moderna. They're a pretty important name right now. And they delivered, as of this report, 4.2%, so pretty much half of the vol that they had been pricing in, which is kind of interesting out there. Let's see how this one is holding up now. They're up 6.5%, up 4.5%, so about the same. So yeah, they're one of the few that is actually under-delivering from a vol perspective. Season-wise, we're still looking at pretty much a blood red season, even though it's like week 4 is the lone exception to that at 101%. So week 4 outperformed ever so slightly. If you paid $1 for your earnings vol, you got back $1.01. So you pretty much broke even. But every other week has been blood red. 72% week 5, 58% so far week 6. The season average is 74%. So you're still getting back about 3/4 of your dollar for every dollar that you spend vol wise. So it seemed like maybe this was going to be the season where the worm turned and we start seeing some outperformance from a vol perspective. These handful of names I was talking about today notwithstanding, that does not seem to be the case. We got big ones popping off later today as well. Maybe we'll have some time to get to those later. Beyond Meat, DoorDash, a whole bunch of names, Dell. So we have reports for those if you want them. Etsy coming up after the bell today as well. You know where to go. TheOptionsInsider.com as well. DraftKings coming up as well. Meanwhile, it's time for us to go into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. This is one of those weird days. We unleashed our Eye of Sauron earlier today. It wasn't really a lot lighting up the tip. I'm sure maybe if we ran it right now, might be some more interesting things afoot out there. But instead, we decided we have a huge back catalog of pretty sizable and interesting trades that are just waiting for us to analyze and unpack. So, Mr. Rock Lobster, we're going to do that today. So put your Wayback Machine pants on. We're going to dial it back exactly a month to January 25th. I do believe all these trades are from our show exactly 1 month ago. So we're not going that far back. The heady days of January. Oh, it seems like just last month. All right, let's kick it off here. On that day, we profiled just an explosion of action out there in Sirius XM. In particular, what caught our eye, and just about anyone who could see that day was kind of the biggest trader going, were the Sirius February 6.5 calls. We first noticed a block of 14,000 going up for 10 cents, lifting the offer. But that was just the beginning. We saw blocks of 3,000 going up after that for 19 cents. We saw 3,000 going up for 30 cents later, 2,700 for 20 cents. A total, get this, listeners, of 91,000 of those freaking things traded that day. So it was just a call explosion. Seems like that early buying kind really just kicked off a whole bunch of action out there. By the time we started, let's see, they started trading around 10:30. By 11:30, well, the vol was 44.7 when the first big block went up. By 11:30, an hour later, they were trading double that, pretty much 88 vol out there. So just things got crazy. But also worth noting, there was a lot of back and forth that seemed to inspire some sellers to come out of the woodwork as well, because 91,000 total contracts traded, but the OI only really increased by about half that, by about 43,000 contracts. So there was a lot of back and forth and churning and burning on that strike that day as well. So let's get into it. Let's see how these calls performed. And it seems like they had good timing, whether it was just fortuitous timing on their part, or probably more likely the impact of all these options they were buying in the gamma. They're driving up that stock a little bit, and on the hedging side, because the stock took off immediately after these calls started going up. It topped out 2 sessions later on the 27th at 687. By the way, when these calls started going up, that first block, they went up the 14,000 lot. The stock was exactly $6. So 2 days later, it had rallied 87 cents. So these things were looking extremely good. They were extremely juicy. The calls closed on the 25th at 38 cents. They closed on the 26th. The stock was already rallying at 55 cents. On the 27th, they closed at 82 cents. So these things had nearly tripled in the span of a couple of days, just on the vol exploding and also from the stock moving in their favor. So it seems like this trade was pretty timely. And what ended up happening is it kind of just kicked off this frenzy of trading on this strike, because the next day, 15,000 more of these bad boys traded, actually adding to the OI a little bit by about 3,000. So they weren't taking off their gains. Net they added, even though obviously a lot of churn and burn going on there as well. And then 22,000 more, effectively half of the OI, trading again on Thursday when they were, or I should say on the 27th, when they were about 82 cents out there. So you might think someone took those bad boys off, and yet the OI only decreased by about 10,000 contracts. So clearly whoever put most of them on the session before wasn't taking all of them off. But it seems like some folks managed to get a bunch off at higher prices, and not all of them. And then what happened as this trade played out, as it usually does, we said it before, when you get these moves, particularly on the long premium side, it usually behooves you to act on them sooner rather than later, because A, they could be short-lived. B, you got time decay and everything else kicking in that makes the clock start ticking out there. And what happened on this one? The stock ended up coming right back down shortly after that peak, that frenzy there on the 27th. And the stock closed at $6.01 on expiration. Now, you know, basic math, these were the 6 half calls. That's not looking good for these bad boys. And the OI dropped down to about 33,000 on the 27th, but there were still about that many open on expiration. There were about 29,000 open on expiration. There were still a few more days when it traded. There are 9,000 more traded on the 28th. And so it wasn't done trading this strike. But in general, does seem like there were more than a few people left holding the bag, even though it is impossible, Mr. Rock Lobster, to trace it. What happened to that initial 14,000 lot? Let's be optimistic and say he dumped those out at a better price. But it does seem like that was the beginning of a lot more buying. And it does seem like some folks got the heck out of Dodge. But it seems like the lion's share, Mr. Rock Lobster, perhaps left holding the bag. Is that your takeaway as well, sir?
Well, short-term options, I love them. But the problem is, it's not a problem. They're like dates. They're not like marriages. So you gotta treat them as such. So, you know, I usually view them as once the trade is green, you're looking to hit the exit somehow. Now you can try to ride it, and you could use running stops, and you could use whatever you think at your disposal to try to keep you in it as long as possible. But ultimately, a green trade on a short-term option is what you want. And you have to start having a decent price where you're just happy to get out. So I think a lot of time you see the green on the screen and you just don't want it to go away, and you want to sit there and you want to watch it and watch it grow, and it's so lovely and blinky. And then the market decides to change direction. It goes the other way, and all your green turns to red, and you're sad. So, you know, this is a case where, they left it all a little too long, he or she. I would say in our chat room, our female traders tend to do a little better taking profits than the male ones. If I just have to do a quick scan of the pit crazies in the chat room, but in this case, I think, you want to take that money. You're in it for 20 cents. You got a pretty good pop. And, you know, with calls is just managing the gain. You've got to take some of the money and maybe let the rest ride, which I think with options, I think is not a bad strategy, just because you don't know. You know, stock you can hold for forever. Just options have a finite life, and we forget that sometimes. So anyway, which is why I was desperately trying to close some of my VXX upside today, and think I'm glad I did, because the dang stocks, vol's already starting to go away. So, I mean, it feels like, at least for today, that was your shot. So I don't know if we're going to get another one tomorrow, but at this point, I'm glad I got what I got.
You're glad you got what you got. Let's file that one. This has kind of been a theme for our sizable long premium upside trades of late, is that they seem like they have their moments in the sun very early on, and whoever puts them on fails to take them off in the proper time frame. This has been a recurring theme now. The line in the sand puts all seem to work out pretty well. Those are pretty straightforward. The buying of premium, particularly to the upside, has been a little bit more difficult for folks to capture in a appropriate time frame. Let's see if we can go to our next one. A little bit smaller trade, but still interesting. This one was on the same day. Not much can match that frenzy of paper and Sirius. This was, I think you called this, Mr. Rock Lobster, a YOLO call trade in Macy's. I remember laughing at the time, thinking, I don't think of my YOLO trade being Macy's, but hey, you never know. Macy's, let's see, at the time we profiled the 3,000 lot of the Feb 17 calls, going up for 68 cents, lifting the offer. This was almost a 92 vols. These are pretty rich listeners. A total of nearly 9,000, so almost 3x that traded on the day. The stock, when they started going up, was $14.87. So this is another one where we had that initial blush and it looked really good. The stock 2 days later, again, the 27th was good for this one as well. The stock hit $17.73. So the stock gapped up nearly $3 shortly after these trades started going up. So these calls went from 68 cents. They closed on the 27th at $2.92. So yeah, this guy was looking pretty good on this trade. What ended up happening to these? This is another one where this strike was fairly active. They traded about almost 9,000, 8,600 on the 25th. We saw the OI go up to about 7,000. So most of that opening, a little bit of back and forth, but most of that opening. Then we saw on the 26th about 2,000 more trade, and the OI actually gaps up about another 1,300 contracts. So more folks piling into these bad boys, seems like. The 27th, 6,200 more trade, cuts the OI a little bit down by about 3,000 contracts. And that was kind of about it for the frenzy. After that, they kind of stayed around that level of OI, actually gained a little more. And by expiration, again, same exact story. The stock fell right back down, closed not that far away from where it was, actually almost exactly where it was. It was $14.87 when the trade went up. On expiration, it was closed at $14.97. So call it what you will, good timing, the irrational exuberance around this trade, maybe a little bit of the gamma effect, maybe all of the above. But both of these trades had a nice pop almost immediately after they put them on. And it looks like some got taken off. So some folks got some dollars out of this, but it's hard to say that all of these worked out in their favor. And if just looking at the initial 3,000 lot, if they just didn't close that one out, that's about $204,000 they left on the table. So it's nothing to sneeze at out there. Mr. Rock Lobster, what's your take on this one as well? Kind of a similar story. Decent amount of size going up. The stock moves aggressively in your favor almost instantaneously. And yet, for whatever reason, they decide not to take them all off, sir.
No, it's it's like Macy's the YOLO. Actually, I did a Macy's YOLO trade, as I recall. I bought. Remember when all this stuff was crazy? What was it, 2 weeks ago or whatever? It was like late January.
It was around the time of this trade. That's when all that craziness was going on. Yeah.
I as soon as the market opened, I bought a call that was one strike out of the money in Macy's. I think it was I can't remember. It's probably the 16s. And literally 20 minutes later, on a 10 lot or a 5 lot, I was up like $1,500. So I just closed it, right? This is stupid. And because at minimum, I was going to put in an OCO order, right? So your OCO order where you have a limit to close if it backs up, and you put a higher offer up and just let the market, let the system watch it. But I go at this point, this is ridiculous. This is, 5 lot, $1,500 in like 20 minutes or whatever. It's silly. So, but yeah, so you got to do that. I think you have to take money. Everybody wants to get that GME, home run. They see it on the news, and it's all free money, and it's all so easy. But the easiest rule is once something is green, it should have your attention. You should have a strategy. Make sure your strategy is a place to get out. It's not like, it's not like a long-term. It's not a long-term investment. It's not like TOSAW working the wheel, trying to generate 15, 20%, whatever he does a year on assets that you don't want to have all this crazy risk and volatility. So you got to, it's easier, I think, if you separate your trading head, you put that in a box, and then you put your investing head in another box, and just try not to let the two heads talk to each other. I think that's the easiest way, because you can have an investment thesis on something long-term, but keep doing short-term trades and just get run over by a buzzsaw, which I don't think does anybody any good. So that's where I would have the difference there.
I like that. The two-headed trading / investing philosophy. I like that. You're right. People do have this interesting aversion to leaving money on the table. A lot of people out there who made a ton of money in that initial pop of GameStop, up from about $19, $20 all the way up to $60. That was kind of the first rally. Then it kind of hung out there a little bit and then took off again a few sessions later up to stratospheric levels. There are people out there who took it off, made a ton of money up on the 60 strike, who are now saying, man, if I had only just hold out. And they're probably more upset about missing the rally up to 500 than they are happy about making the initial money. So there's that weird flaw we have in our psychology, where this FOMO causes you to leave tons of money on the table, actual money you have in your hand. It's this weird psychological phenomenon I think most of us have, and it's very strange and obviously very damaging. And yet it looks like it claims some victims yet again. Let's go to the dark side for our final one, a little bit of premium writing. These seem to work out better of late. This one's back and forth. Ford's been crazily active of late. In fact, so active since this trade that it's kind of hard to really see the forest for the trees. It's been just on fire. Remember, there were a few days out there where Ford was almost topping our most active charts, which, I mean, it's Ford. About as sleepy as it gets. What we profiled exactly a month ago was a 6,500 lot of the Feb 12 halves going up for 75 cents. Seemed like an overwrite at the time, and it was a 67 vol. It was going into earnings. You know anything about Ford? They're kind of sleepy. They don't usually trade at that high of a vol level. So it seemed like it was a pretty safe right. The stock was at, where was the stock? At 12.11. So they were a little closer to that strike than I thought, but still seemed like a pretty safe right. They had earnings on the 4th after the bell. And since that trade, there has been so much paper on that strike, it's been almost impossible to ferret out what the hell is going on. On the 25th, 10,000 traded. That was actually the quietest day. Then shortly thereafter, 27th, we saw 7,000. Then and getting into February on earnings, we saw another 11,000, and then we saw another 28, 23,000. Going up on the, just all around these days, 48,000 on the 9th, 53,000 another day, 62,000 on the 10th of February. So short answer to this question is we have no way of knowing what the hell happened to this 6,500 lot. It got completely sucked up in the hurricane of literally hundreds of thousands of contracts that traded here. It looks like 500,000 contracts or close to it traded on this strike just in the time since we profiled this trade. So, yeah, the OI on the 10th was 143,000 contracts open on this strike. So, yeah, this 6,000 lot, given how the strike performed, how the stock performed, this seems like it worked out pretty well. We didn't really hit 12.5 again until actually very recently, flirting up with those levels again. So I'm going to go out on a limb and say this 6,500 lot worked out, but it's kind of hard to say for certain because, again, Ford became overnight from this sleepy name to this hurricane of options paper doing 60, 70, 50,000 contracts just on this one strike, let alone the other strikes they have out there. So Ford was doing some numbers, and looks like this guy, it worked out pretty well. You know what else usually works out for us? It's your questions, and it's Thursday, so let's get to them.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. We got a lot of questions coming in here from all parts here. Let's kick it off with, we have our poll about VIX, and you guys voted above 20 for a month from now. We'll get into that more, I think, on vol views tomorrow. Let's kick it off really quickly with some love, as I am wont to do. This comes from Julian Mittman. He says, "Hi, Mark. Just found your radio network and cannot seem to get enough. Filled with wisdom, wit, and educational wealth. Studying options and learning how to use them for investing has become a pleasant and interesting journey for me. Keep up the spirit and continue to deliver the best options content." Well, thank you very much, Julian, and everyone else who takes the time to rate and review and send those kind of comments. And, it's not for the ego boost. It's nice to hear that stuff. It's more because we like to see that this stuff is working for you and it's effective, and also that you're sharing that with other people out there so they too, in turn, can come in and benefit from the content. So thank you very much for taking the time, Julian, to rate and review us out there. It does help new folks continue to discover the content. Speaking of new folks, this guy's not a new folk. He's been around for a bit, but he's looking in the chat, looks like today. Good old my boy Luigi. Sounds like he has a question for you, Uncle Mike. He says, "Good morning. I have a question for Uncle Mike." So I guess he does. "I am considering a long call in TBT and a long put in TLT. What is the difference between the two? My reading shows they will both do well with rising interest rates." Mr. Uncle Mike, I know you look at TLT every now and then. I'm not sure if TBT is in your quiver as well, but we have to say here for your good buddy here, my boy Luigi.
Luigi. I just wanted to start everything off with Luigi. So in looking at that, I would, if you're going to go that route, I would suggest just going with, if I'm not mistaken, and I'm not 100% sure on this, I believe TBT is an inverse ETF for TLT. And so if you're going to go that route, why not just keep it simple and buy puts on TLT? Typically, what I've found with inverse ETFs is that I think that they're a great solution from whence there really wasn't a problem. In that if you want to be negative on or bearish on something, you already have the ability to buy puts. and you already have the ability to short underlying. So if that's what you're looking to do, I would probably be more of a fan of just doubling up your size on puts on TLT instead of calls on TBT, just because of the fact that I think TLT is going to track a little better, and inverse ETFs, they're not designed for longer term things. A lot of them reset every day. So from my understanding, I would just go with the puts on TLT if that's your sentiment.
Yeah, it is a 2x inverse one out there that does reset daily. You're right. That is kind of the bane of a lot of these inverse and levered ETPs is how frequently they reset. And that usually can be what undoes you in a lot of these out there. Let's go another one. This comes from BZ Tokyo. I'm not sure what he's getting at. This came in a couple of weeks. I think this after we did the show with the BJ and the Bear theme song, which was suggested by a listener. I forgot who suggested it. But BZ Tokyo writes in and says, after extensive research, it appears that Mark deserves much more credit as the bear is a name for the monkey chimpanzee co-star. Yes, I do believe we discussed that on the show. And then he goes on to say, it appears Mr. Longo did not do his due diligence on this one. So I'm kind of confused, BZ Tokyo. You give me credit in the first sentence, and the second sentence you say I did not do my due diligence. As I recall, I wasn't confused. I thought I always knew the bear was the monkey. That's kind of the whole point of the show, whatever point there was to that show. That seems to have been about it. Even though if you listen to the theme music, they go on about not paying property taxes. So maybe that was the point of living in a truck with a monkey. But there you go. I guess I deserve credit, but also did not do my due diligence. I'm not sure. I'm not sure what that means. Let's see. Tony Weber, clever folks in our chat. We have such clever folks. He says, well, it is Throwback Thursday, aka TBT. Yes, you are correct. It is indeed Throwback Thursday out there. Let's see. We got a lot of questions here that have piled up. Let's see if I can get to a couple of ones. This one came in a while ago, a couple weeks ago on the show from D Stocks 3. He says, I tuned in and listened to your podcast today, but I didn't catch any of the discussion on Ver Biotech. Can you please give me a recap as to the Putpalooza that you mentioned? This was a couple of weeks ago on the show. We talked about a Putpalooza in Ver Biotech at the time. They were the Feb 17 half puts. Paper looks like gobbling. Actually, it looks like they were selling those for 55 cents, 6,450 times, and then 50 cents, 4,000 times. A total of about almost 20,000, about 19,000 going up on the tape. This was not an earnings trade, though, because the earnings are on March 25th, a month from now. Obviously, this one has gone the way of the dodo. This was a Feb trade. Let's just pull up really quickly, check in on them, see how they fared on expiration, which was last week, of course, on the 19th. Let's go out there. The 19th, the stock closed at 76.58. Wow. So this stock has moved aggressively in the other direction. At the time, that was 125% vol we were talking about as well. Clearly, that was merited because these 17 half puts, just make sure, yeah, this is the right name. This is Veer. This thing has more than doubled since we talked about it. Wow. Let's look at the chart on this bad boy. It looks like, yeah, it was trading 44 at the time. When this trade went up, it was trading, this must have been earlier. It was trading 27.91. So that actually had to be a little bit early. Yeah, it looks like that was probably a little bit more than a month ago, it looks like, because it was trading right around the 20s in the mid-January level. And then it gapped up from about $40 late January up to 83 2 sessions later. So it doubled pretty much overnight. It's one of those biotechs that doubled. So yeah, it looks like these puts are kind of firmly in the rearview mirror and also expired. But interesting stuff here nonetheless. All right, speaking of interesting stuff, we have a lot more coming. So let's get to it as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. It's time to go around the block. I mentioned we have some big earnings still popping off. Let me grab a couple of those really quickly before we roll on out of here. Coming up after the bell later today, what do we have today? We have Beyond Meat after the bell. They're trading at $152 as of the time of this report. They were pricing in, get this, listeners, $16.10, but in the past they moved $30.21. So pricing in roughly half of the amount of movement they had in the past. We've got CRM. I do believe that's Salesforce. Oh, I love that ticker, CRM. Let's see, 240.5. They were pricing in 1263 in the past. They moved $13.5. So pretty close to in line. DoorDash 176.32. They were pricing in 1733. We don't have any previous earnings data for them, so this is a newcomer from an earnings vol perspective here. Dell, they were priced at 81.69 at this report. They were pricing in 465. In the past, they moved 281, so fairly rich for Dell, which hasn't been the biggest mover of late. Etsy, this one has been moving of late, 209.10 as of this report. They were pricing in $19.29. In the past, they moved 23.04, so a little bit light from an overall earnings perspective. Let's go out to DraftKings as well. It's another name that's been hot of late. 60.25 as of this report. They were pricing in 489. In the past, they moved 508. So there we go, kind of in line with what's been happening out there of late. You guys can find those for yourselves completely free, theoptionsinsider.com. Fresh, updated right before the show for us. Let's go back out there. Let's see if he's recovered from his umbrage from not selling his calls. Mr. Rock Lobster, A, are you there? And then B, if so, what are you keeping an eye on for the rest of the week?
Yeah, I did recover from the umbrage. I did sell some, which was okay. So I'm not super happy. What am I keeping? Like the market. Oh my gosh, it's moving. And I'm not, I guess the short tell was there was that heavy bid for vol futures, and you look at VIX is up 36 points, right? Huge move. VXX is up only $1 and change, something like that, barely over $1. Let's see, what, $1.20 something, right? So VIX cash is moving. It should. Market's down 2%. Vol futures aren't moving a lot because it was kind of already there. So we'll see actually, it's very interesting because we just hit lows of the March future yesterday. As I recall in the close, I think we touched the low for the March contract. That, as far as I can remember, it only lasted, for a brief moment, and now we're off to the races again. So we'll see how high and how far this goes, and how much the market does not like this new spending extravaganza. I guess they got how many trillions they have on tap now for, and I have to say, for what purpose? So I don't think the market likes it very much. So that's really the main thing. Keep an eye on bonds. I think the bonds, the lower they go, I think the market's going to get dragged with them at this point.
Well, the market did seem to like it for all of 2020. It's just now they're finally starting to turn. Enough is enough, sir. But they like that. They like that endless spigot for most of 2020. So they can't look too askance at it now. Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on for the rest of this week until next week? Oh, now he's taking umbrage. His own trades out there. All right. We'll get everybody sorted out here as we wind down the show, listeners. There it is. That music, unfortunately, means we have come to the end of an epic journey through the world of options. But if you need more journeying through options in your life, don't worry. We'll pump some fun stuff into the live chat. We'll be back in exactly half an hour with the once and future Dr. Fix, Mr. Rick Rosenthal, who runs all things FTSE Russell over there at SIBO, to dive deep into some new stuff they have cooking in FTSE Russell, as well as what the hell else is going on in all things futures options. Probably going to talk some rates. They have been moving, as well as probably some energy. Who knows what else? I think some metals have been going crazy. All sorts of fun stuff. You got to tune in to TWIFO to find out. That's what the Movers and Shakers report is all about. That's in exactly half an hour. But before we do that, let's go back around the horn. Let's start with the Rock Lobster, sir. If folks are intrigued and want to check out anything you folks are cooking up over there in the land of the pit, where should they go? What should they do?
Come over to Option Pit. We are having a little special deal on our pro program. So if you want to be an all conditions, all the time person, come over to Option Pit to learn about. That's it.
Come over to Option Pit and get your learning on. Let's try one more time. Let's see if he's there. Mr. Uncle Mike, sir, are you alive?
I am alive. Sorry for the Skype connection not really doing what it was supposed to do. I was screaming at you, but it wasn't going through for whatever reason. But nonetheless, I am here. stcharleswealth.com if you want to work with a financial advisor who's not afraid of the option product and who is looking for opportunities on days like this. And follow me on Twitter, @MikeTOSAW. I will have expanded strategy blocks hopefully within the next couple of weeks.
There you go. We've been retweeting them and liking them out there, listeners. So slowly but surely, he's getting up. He's already up to 60 followers. So a meteoric rise for Uncle Mike. Give him a follow at Mike TOSAW, TOSAW, on the old Twitters. See what he's up to throughout the week. A lot of stuff going on outside of just this show. At Mike TOSAW is the place to go. And on behalf of the Unclest of Mikes and the Rocklings of Lobsters, and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. Stay tuned. We got more hot action coming up at you in a little bit here on TWIFO. Then we'll see you back here again tomorrow. I got a feeling we'll have some stuff to discuss on Vol Views, noon Central, 1 p.m. Eastern. And then it all kicks off again on Monday with another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.